Good morning, and welcome to today's webcast, Drive Growth with a Customer Profitability Plan. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to share our big news, that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website via the link in the slide deck and handouts widget. With that, I'm pleased to introduce today's presenters, Kristi Armijo, Senior Manager, and Brian Favorat, Senior Manager. Kristi manages cloud-based corporate performance management and business intelligence platforms. She implements CPM solutions that enable businesses to gain enhanced analytics and business insights by streamlining financial planning and analysis processes, automating data collection and consolidation, and providing real-time visibility into key performance metrics. Brian has experience selecting, maintaining, and deploying financial system solutions and provides management consulting services to public, private, and not-for-profit clients. He implements corporate performance management solutions that allow for enhanced analytics and business insights. With that, I will turn it over to Kristi to get us started.
Hi, everyone. Thank you for joining us today. Over the next 30 minutes, we'll explore how understanding customer profitability can really drive your business growth. We'll cover 3 areas: why customer profitability matters, how managed insight solutions can help, and why a value-based approach makes all the difference. Why does customer profitability even matter? Understanding customer profitability is crucial because not all customers contribute equally to your bottom line. Some may generate high revenue, but at a higher cost, while others might be low maintenance with high profitability. Without clear visibility into your customer profitability, businesses risk over-investing in less profitable segments and underserving their best customers. This can lead to missed growth opportunities and inefficient use of resources. All right, let's go ahead and kick it off with a quick poll. So how confident are you right now in your ability to analyze customer profitability? Some of you might be pretty confident because you have solid data and insights, while others, you might be on the opposite end of the spectrum. Maybe you're missing the right resources or visibility into your customers. And of course, some of you are going to be kind of right in the middle. Brian, what are you seeing in the marketplace?
So customer profitability is one of those areas where the more you dig, the more you realize how many factors are at play: customer behavior, cost structures, even how teams work together. It's always interesting to see how organizations define actionable insights. Sometimes it's about having the right numbers, but often it's about turning those numbers into decisions that move the needle. If you're feeling very confident, that's fantastic. Maybe you've got a great process or a strong partnership between finance and operations. I think we all agree visibility is key. Whether you're working with sales, operations, leadership, having a clear picture of customer profitability can really drive strategy. Let's see how the group feels about the question that we have here. So it looks like we are at about 61%. See if we can get a few more people in here. All right, let's turn it over. So how confident are you in your current ability to analyze customer profitability? Well, that's about right there. So you get some people here very confident. We have clear, actionable insights. That's fantastic. Thank you for sharing that with us. Most in the middle there, so somewhat confident. We have data, but struggle to interpret it. And then a few out there, not confident. We lack that visibility into customer profitability. So happy to help continue the discussion today on how to address that.
So kind of what we were saying is many of you are struggling to analyze that customer profitability. And a big challenge that we see is manual data consolidation. It can be slow, it's really prone to errors, which can cause a bit of a mess with your reports and accuracy of those reports. So when you start to think about this, pulling data from different resources, then trying to reconcile it and then validate it, it often causes delays. And then without real-time information, you as the decision makers end up working with outdated information. It can slow down your planning cycle, it can create silos within the business, and also can drag out any approval process during the time. And all of these make it tough for the finance team and other decision makers within the organization to deliver clear and actionable insights that really drive the business. And if you need to, so you have these reports and now you need to update them, the whole process starts all over again, which can be very frustrating at times. So today we're going to look at some best practices and some right tools that can help you overcome these challenges, making your customer profitability and analysts a little faster, more accurate, and more efficient. So let's dive into some of these best practices for managing and improving customer profitability. So what if I asked, what if you could integrate your financial and operational data into a single unified platform? This could mean fewer errors, more time to focus on analyzing the data instead of wrestling with spreadsheets. Imagine having a dynamic real-time reports or dashboards that are interactive that deliver instant insights. No more late nights spending consolidating and validating the data. And in this approach, you can ensure accuracy and gives you a complete view of the costs and revenues tied to each customer. Then we can add in scenario planning or what-if analysis. Then you get to start to gain ability not only to report actuals, but now you can start to compare them against a forecast or a budget. These improvements don't just enhance collaboration, they really empower your team to be proactive. You can tailor your strategies to retain high-value customers and optimize or reconsider less profitable ones. And then how do you grow your business? That's where customer profitability planning comes into play. So think about it this way. Once you know who your most profitable customers are, you can really focus your sales and marketing to keep them happy and growing those relationships. For customers that aren't as profitable, you have options. You can maybe tweak some pricing. Maybe you can adjust the level of service or finding ways to cut costs. So this isn't just about boosting revenue. It's really giving you the ability to start making sure your growth is profitable but sustainable. When you're working with real-time data and scenario planning, you can pivot quickly when things change instead of having to scramble just to catch up. So bottom line, a good customer profitability plan helps you turn insights into action so you can grow smarter, not just bigger. All right, so we're going to do another quick poll. Now let us know what's the toughest part for you when it comes to managing customer profitability. Is it juggling all the data, figuring out the cost, forecasting, or getting sales and marketing on the same page? Brian, love to hear your thoughts on this one as well.
Understanding customer profitability. Sometimes it's about connecting the dots between different teams. Sometimes it's about making sure costs are truly reflected in the numbers. Integrating financial and operational data is a challenge, especially as businesses grow and diversify. It's not just about the numbers. It's about making sure everyone's speaking the same language. accurately allocating indirect costs can spark some lively discussions. It's a balancing act between fairness and practicality. Forecasting profitability is always a moving target, especially with changing market conditions and customer needs. It's about being agile and ready to adapt. So let's see what we have here. We're about halfway through. Perhaps we can get a few more submissions. All right, let's turn it over and see the results. So looks like the majority here. So what is your biggest challenge in managing customer profitability? Accurately allocating indirect costs. Yep. So we're definitely going to talk a bit more about that today. Coming in second there, aligning sales and marketing efforts with profitability insights. Absolutely. Awesome. Well, thank you for those responses.
When you start to automate data and reporting, it's easier to compare actual customer profitability against a budget or forecast. So instead of looking at isolated numbers that don't really give you any context to what you're looking at, you get real insights that help you make smarter decisions by being able to compare to a plan, forecast, or profitability, and getting all that data in one place. So your reports become quick, accurate, and useful. Here's something to think about. When you're going into the planning cycle, think about how much time and effort you put into it. But the statistics say that 64% of annual targets become outdated within 4 to 6 months. That's a lot of time and effort that's spent on these plans that quickly lose their value. So when we're looking to start to centralize this and automate systems that happen smoothly, budgets can stay fresh, you can react to real-time changes, and then you're going to be able to be a little bit more agile making with that information at hand, making faster, smarter decisions to keep your business moving forward. A big part that what Brian and I do is help organizations implement or enhance Workday Adaptive Planning. This solution is built specifically for business users, so you can take control of your planning and forecasting without needing a lot of deep technical skills or constant IT support. It empowers you to run your own plans, explore what-if scenarios, and easily compare budgets to actuals, all while providing clear summaries of key insights. Now I'm going to turn over the floor to Brian, and he'll walk you through a demo of Adaptive.
All right. Thank you, Kristi. Bear with me, everyone, as I transition my screen here. So let me know when that comes up for everyone, Kristi.
All right, I see it. Thank you, Brian.
Awesome, perfect. All right, let's move from concept here to practice. I'm going to walk you through a demonstration of Workday Adaptive Planning to show how customer profitability planning works in a modern FP&A environment. We'll look at how you can model, analyze, and visualize customer profitability, moving beyond the limitations of spreadsheets. So first, let's start with the product revenue modeling. This is core data structure where we capture various revenue by products and customer. Here you can see in our demo data for various products and business lines. What's powerful here is how interactive and the experience is for the end users. For example, I can quickly adjust assumptions like volumes and discounts and see the impact on revenue in real time. If I want to drill down into specific customer or products, I simply click and the cube updates instantly. This makes it easy for teams to collaborate and iterate without worrying about broken formulas or version control issues that make the planning process laborious. All right. Next, let's pivot to reporting. Here's a customer profitability report with customers down the rows and forecast metrics across the columns. You can see gross revenue, discounts, net revenue, direct costs, unallocated overhead expenses, overhead allocation percent, allocated overhead, gross margin percentage, net margin, and net margin percentage. This report gives us a comprehensive view of each customer's financial contribution. Notice the difference between gross margin and net margin for some customers. For example, customer 6 has a strong gross margin, but after overhead allocation, their net margin drops significantly. This highlights how overhead allocation can dramatically impact perceived profitability and why it's important to analyze both gross and net metrics. With adaptive planning, you can sort, filter, and drill down and understand what's driving these results. If you want to see the breakdown of the specific customer, I can click and instantly see the underlying data. All right, Let's look at a second report here, also focused on customers, but with a slightly different layout. Here, the accounts are down the rows. As you can see, we have gross revenue, net revenue, direct costs, overhead margins. The columns show the prior 2 years of actuals. The format is great for trend analysis. For example, you can quickly see how a customer's profitability has evolved over time. Maybe customer's net margin has changed year over year due to cost management techniques, or perhaps gross revenue is flat, but direct costs have increased, squeezing margins. The historical perspective is invaluable for strategic planning and forecasting. All right, and finally, let's look at a summary dashboard at the organizational level. This dashboard brings together the big picture. At the top, we see the total company revenue, direct costs, allocated overhead, net margin, giving us an instant snapshot of overall performance. There's a line graph tracking both revenue and margin over time, so you can spot trends and seasonality at a glance. Next, we have a bar chart breaking down the net margin by customer. This makes it easy to identify which customers are driving profitability and which may need attention. Lastly, there's a graph showing gross margin percentage by customer. This visualization helps us quickly compare margin performance across our customer base. All of these views are interactive. You can drill down, filter by segment, or toggle between scenarios, making it easy to answer questions and support decision-making in real time. What's most valuable is how adaptive planning automates the calculations and allocations, so you can spend less time wrangling spreadsheets and more time analyzing and driving the results. So to sum up, Workday Adaptive Planning gives finance teams a powerful, flexible platform for customer profitability planning. You can model revenue, analyze detailed profitability, track trends, and visualize results all in one place with transparency. All right, so I'm going to pivot back here. So value-based approach, the purpose of the demonstration here of an EPM solution like Adaptive is to help illuminate perhaps the need to transition from focusing on lower value activities to higher value activities. So this is what we typically see for organizations that are looking to enhance their overall processes, right? You're spending an inordinate amount of time in your current state on data operations, doing sort of the tactical stuff. And then similarly, maybe a lot of time doing reporting and looking at the controls and making sure everything's in place there, and spending the least amount of time actually looking into the business insights and helping to drive the business in the organization. And really what we're shooting for is that desired state where we're spending the least amount of our time doing the sort of tactical data operations, the reporting and controls, and spending the most amount of time focused on business insights and really what matters and drives the business forward. Okay. Embed information in the business process. High-performing organizations understand that being data-driven is essential for making informed decisions and achieving strategic goals. First, we have the plan. This involves setting clear objectives and utilizing data to inform our planning process. By analyzing historical trends and current data, we can create more accurate forecasts and strategic plans that align with our organizational goals. This proactive approach allows us to anticipate challenges and seize opportunities. Next is perform. Once we have our plans in place, we need to execute them effectively. This means leveraging data to monitor performance against our objectives. By establishing key performance indicators and regularly reviewing our progress, we can make timely adjustments and ensure we're staying on track. The third component is people. A data-driven culture requires that we empower our staff and stakeholders with the right tools and training. By fostering a culture of data literacy, we enable everyone in the organization to make informed decisions based on data insights. Engaging our people in this way not only enhances accountability, but it also drives collaboration across departments. And finally, we have communicate. Effective communication is vital for ensuring that data insights are shared across the organization. By creating transparent channels for sharing information, we can enhance collaboration, align efforts, and foster shared understanding of our goals, regular updates and reports, and keep everyone informed and engaged on our strategic initiatives. And that is really what's represented here with that communicate, is having that EPM solution that ties that information together so that everyone has one platform to manage that communication. So accelerating business value. I like to put this slide on here just to illustrate this concept. What we typically see with many of our clients is everybody's wondering, where they're going to end up. But really what the first thing is that they're saying, okay, what's happening? They would love to be able to do that, but more of what they're focused on is what has happened. So it's all rearward facing and where were we? And really what we're trying to do is saying what is happening now so that managers can, in the decision-making window, affect change in the organization. All right, and let's explore this concept of rolling forecasts and their value in the financial planning. On this slide, we have two graphs, one representing traditional annual planning, and the other illustrates a rolling forecast. First, let's look at the annual plan. The model typically culminates at the end of the budgeting year. While it provides a snapshot of our financial expectations at a specific point in time, it can quickly become outdated as circumstances change. This static approach often limits our ability to respond to new information, unexpected challenges, or emerging opportunities. In contrast, the rolling forecast graph demonstrates a more dynamic approach. Here you can see how the forecast continues to evolve over time, incorporating actual performance data as it becomes available. This waterfall effect illustrates how real-time data feeds into our projections, allowing us to adjust our forecast based on the most current information by continuously integrating actual performance data and adjusting our projections. We can navigate change more effectively and position our organization for long-term success. And then just arriving at the end here in conclusion, so benefits of an enterprise performance management solution. Really, when we're talking about customer profitability planning, what we're trying to do is get a better understanding of how can we better manage facets of our plan, of our organization. So we want to have a platform and system that allows us to do iterative rolling forecasts. It can do efficient budgeting, eliminate complexity that comes along with spreadsheets. I'm sure nobody here has ever had any issues with formula errors or that sort of thing, and being able to augment or mitigate some of that can really improve the time and efficiency to getting those answers that everybody's looking for. Many of you may be looking to automate your consolidation at multiple levels of the organization, having that happen more efficiently and effectively. Something that's easier to use as a management reporting tool, simpler functionality, being able to just drag and drop things and not having to necessarily create really complex things from ground up. Financial and operational metrics reported from a single system. So instead of having disparate systems, it's often nice to have everything in one place and have things available at a glance. And then what if analysis. So one of the things that we didn't really cover too much today, but being able to run those different scenarios. I think we're in a very dynamic environment right now. And what we're seeing with many of our clients is they're looking to plan those what if analysis, right? So what if I get this customer, these clients to come in? What if we are able to negotiate our rates a little bit better? What if we are impacted by tariffs or something to that effect? How can we integrate that into our overall planning to see, where we would be in those various states? So continuous engagement, looking at high-performing organizations, as I mentioned before, they are responsive, they're adaptable, they're collaborative, they empower their managers and their people, having that system that's not just finance driven, meaning finance collects the information, gathers it together, and then disseminates it out to the organization, so usually after the period has passed, but rather empowering them in those periods to make decisions and being able to manage and control their part of the organization. And with that, I wanted to thank everybody for joining today, and I will pass it back to Dela.
All right, thank you, Kristi and Brian, for a great presentation today. If you submitted questions today, we will do our best to follow up with you after the webcast. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate your performance upward. Thank you for joining us, and we hope you'll join us again next time.